Hello everyone, welcome to Bald Guy Money, and we start this one off focusing in on the continued strength we're seeing from precious metals because despite the fact that many market commentators have been calling the top for both gold and silver since October of last year, as you can see here, both metals continue to outperform the S&P 500 on a 12-month basis, even though the stock market is near its all-time high. Now, to be fair, this isn't just a 12-month phenomenon. It's something that started about 5 years ago, as you can see in the data here, showing returns on different investments and savings options if you had invested $500 each month in these since January 2021, with gold even at a 10% premium above spot, which is what I use to calculate this data, up 50% over that period, beating even the S&P 500 when you factor in dividends, which is actually performing much closer to silver, which I have also calculated at a 10% premium above spot. Now, despite this strong showing from metals, including fantastic performances this past week, there is a lot of uncertainty ahead for both gold and silver, especially considering conflicting reports on gold tariffs that temporarily spiked prices at the end of this past week, as well as coming peace talks with Russia that some have said will crash metals prices once and for all. Now, considering the major implications of this on gold and silver prices moving forward, in this video, I want to discuss the tariff situation for gold, its impact on prices, and if you should be worried about downside risk on the prices of both gold and silver. Once that's covered, I want to talk about a potential peace deal with Russia, if it will crash prices like some say it will, and where I think prices are headed as we enter the last part of 2025. And to finish this video off, we will be revisiting the topic of gold revaluation as the Federal Reserve, yes, you heard that correctly, the Federal Reserve published a paper on it last week. I want to talk about what that paper said, what it means for revaluation, and what it means for both the price of gold and for the price of silver moving forward. Now, just before we dive in, please remember to check out summitmetals.com if you want to buy gold and silver at a great price from a dealer you can trust. And that includes 5 ounces of silver at spot when you use code NEWCUSTOMER at checkout. Details are in the video description below. So, jumping in, about 4 weeks ago, while I was on vacation, I made a video where I talked about copper, and I was telling you all in that video to avoid overpriced copper bullion products sold by many prominent online dealers. Now, I made that video following the announcement of a 50% tariff on copper imports to the USA that sent importers scrambling to buy and import as much copper as they could before the tariffs took effect, which spiked the price of copper to record highs of nearly $6 per pound. But as the headline in the previous image suggested, it didn't last long, as the White House later changed course and said the tariffs did not apply to raw copper materials, crashing the price from the closing high of $5.87 per pound by 23% down to $4.52 per pound where we are today. Now, the reason I mention this is because some people are wondering if a White House announcement confirming there will be no tariffs on gold, which is the current expectation of the market, after the White House said they would issue a clarification on bullion tariff misinformation, has the potential to crash gold and silver prices in the same way that the announcement on copper tariffs crashed copper prices. Because if that happens, that would bring silver's price to $29.51 per ounce and gold all the way down to $2,616 per ounce, which is very extreme, I know, but it also shows you just how volatile the copper price has been over the last 6 weeks. Now, to quickly address that question, the answer is no. We should not expect that. And the reason is because the White House issued that statement about misinformation on bullion tariffs while the markets were still open on Friday, causing a temporary pullback in gold and silver prices, which I have marked here on the screen, which were followed as you can also see in this data, by rapid price recoveries resulting in both gold and silver still finishing marginally up on the day. And as further proof to back up what it is I am saying about the stability of precious metals prices, despite this misunderstanding with respect to gold tariffs, I present to you all the gold mining stocks and how they reacted in after hours trading, with the large gold miner ETF, the GDX, finishing up in after hours trading at $58.15 per share versus the closing price of $58.06 per share. And why I present this to you and say it makes me feel very confident about how the market is going to open on Monday is because if there was concern about this tariff misunderstanding potentially causing a major drop in the prices of gold and silver, we would have seen it in the after hours trading of this mining ETF. Now, what about those peace talks with Russia? Won't that impact the price of gold and potentially silver if the war in Ukraine is successfully ended? Well, as I have pointed out in past videos, wars typically drive temporary price moves in precious metals prices. And although it's true that gold price increased in the weeks following the start of the Russia-Ukraine war, we have to remember that the price of gold pulled back aggressively only 6 weeks later as the Federal Reserve kicked off its fight against inflation and started raising interest rates, as well as temporarily shrinking the money supply via quantitative tightening, leading to the exact same behavior for the price of silver as we observed for the price of gold, which tells me that money supply, interest rates, and the changes in demand that those two factors trigger are the driving forces behind precious metals prices rising, much more so than war or geopolitical issues, which of course can fuel moves upward, but in a much less sustained way. So with global money supply reaching new record highs almost every month now as China, Europe, and the United States spend and stimulate to encourage economic growth, and market observers are now pricing in a possibility of 3 interest rate cuts by the Federal Reserve in the last 4 months of 2025 after some very bad jobs data, it's clear that precious metals are only just getting started. And the major moves we are seeing in mining stocks, coming back to the mining stock topic, are also sending us that clear sign that the precious metals bull market is really only just getting underway as institutional investor confidence in the sustainability of both gold and silver prices continues to grow, resulting in increased inflows, so money flowing in to the large gold miner ETF, the GDX, and the junior miner ETF, the GDXJ, which are now significantly outperforming the Nasdaq as they break out to new 52-week highs. And what I can say here about these recent moves up is that it's likely a signal that institutional investors not only remain bullish about the sustainability of gold and silver prices, but they are likely expecting metals prices to move up again very soon, which would be perfectly in line with the 4-month warning I gave here on the channel back on May 4th of this year when I said to expect the next big move up for gold and silver after a 4-month summer consolidation. And it's why I encouraged everybody who watches these videos to remain on their purchasing schedule while expecting some pullbacks along the way. But why I repeat this message now is because people who have wanted to get out of gold at $3,400 an ounce, they've had plenty of time to do so. They've had 3.5 months to make that decision to sell gold at this price. And as central banks and other investors continue to buy at a steady pace at the same time while these sellers are slowly disappearing, despite the fact that I admit we may still see a last flush out in price in August or early September, what I think we are going to see is we are still going to see new 52-week highs made for both gold and silver in 2025, potentially as high as $3,750 for gold, which was my 2026 price prediction that I've moved forward to 2025, and $42 an ounce for silver, which is my unchanged target for 2025. Now, just before we get to the big gold revaluation news, the paper published by the Federal Reserve and its potential impact on silver, please remember that if you want to diversify your hard asset portfolio into land, visit channel partner landofland.com. They are offering a beautiful property in Florida's Indian Lakes Estates to my viewers at only $24,995. It is located near a golf courses, and with taxes under $16 a month, this is a great piece of land to own with plenty of potential. So if you want to take advantage of this deal or see what else they have, check out landofland.com or call the number on the screen, and remember to use code BALDGUY for $300 off your purchase if you're serious about rounding out your hard asset portfolio. Now, jumping into our viewer question for this week, and please remember, I answer one viewer question in every single video I do. You can put your question in the comments section now, and you never know, it may appear in my next video. And this one is a follow-up on something I talked about in my last video, which is the revaluation of gold. And it's a hot topic right now, and it's important we come back to this topic this week because we've had a big development in this story. And as I present that development to you, I also want to address this question, which comes from the Carson City Bandit, who asked, what would happen if gold was revalued to something lower than market price, for example, to $1,000 an ounce? So as I have covered in past videos, if the United States government wanted to totally offset the $37 trillion in debt they hold on the country's balance sheet, they would have to revalue gold to approximately $141,000 per ounce. But as I've said in the past, that would be a revaluation not of gold relative to all the currencies in the world, but rather of the US dollar relative to gold. And what I mean by that is that such a declaration, such a revaluation, doesn't make the real value of gold go up to $141,000. Rather, what it does is it revalues the dollar down relative to where gold is today, and in a big way. Because as I said in a video from June, if this was done, this revaluation of gold, it would likely, first of all, send inflation spiraling out of control, and it would make your $141,000 ounce of gold worth anywhere from $10,000 to $14,000 per ounce in real purchasing terms based on the US dollar's value today, with the possibility of triggering a global currency panic, crashing the world's financial system, and pushing the value of gold as people exit fiat currencies and enter hard assets, pushing the price of gold up when measured in the current value of the US dollar to between $26,000 and $34,000 per ounce. Now, if that's what the United States wanted to do, which is collapse the US dollar-based global financial system, they had every opportunity to do so back in 2008. Instead, every piece of evidence we have shows us that the United States and its allies around the world want to maintain their influence over the global financial system while actually trying to gain more influence over it. So this type of revaluation to $141,000 per ounce doesn't make much sense, as it would achieve the exact opposite, which is why the most likely option to prevent a global panic and financial system collapse would be to mark the price of gold to market price, which today would add nearly $1 trillion in assets to the United States government balance sheet, bringing the country's debt to just below the critical threshold of 120% of debt to GDP, while leaving the door open to future revaluations, helping to stabilize the debt to GDP in line with current White House strategy. So that brings me to the big update that I promised to reveal in this video, because where many people were calling this a fantasy, this mark-to-market gold revaluation, many people were calling it a fantasy and something that no serious person in the government or the Federal Reserve is even talking about, the Federal Reserve quietly published a paper on this topic last week, and it was written by one of the Fed's principal economists. His name is Colin Weiss, and what he said in the paper was, and I am paraphrasing a bit here, is that the United States could explore the option of spending more money without increasing taxes or increasing the national debt on the balance sheet by revaluing, they literally use the word revaluing here, its 261.5 million troy ounces in gold reserves from $42.22 per ounce to the current market price. And he also mentioned that it's an idea that has also been talked about in Belgium. So to me, it's clear that this idea of revaluing gold, which is really just an acknowledgement of its status as money, is gaining traction, in that interest in this idea is growing and even being talked about at the Federal Reserve now. But before we get carried away, for the people who may have heard this story and saw other YouTubers celebrating it, there was a word of warning hidden within the paper that the Fed published. And that warning talked about how this has already been done, most notably by Lebanon in 2002 and 2007, allowing them to pay back debts representing 11% of the country's GDP. And for those of you familiar with the troubles Lebanon is experiencing today, you'll know that although this move gave the country temporary relief, it didn't solve the fundamental issue it was facing, which was they simply spent too much money relative to what they took in, which is a problem the United States is still facing today. Now, this move, the revaluation of the Lebanese gold to help relieve the country's debt pressure, ended up making their problems much worse. And it showed on an international stage just how desperate the Lebanese government had become, as it wasn't long after that they experienced hyperinflation and a crash in the value of the Lebanese pound, making it practically worthless today, as you can see here, showing that it has lost more than 98% of its purchasing power versus the US dollar since 2023. So, coming back to Carson City Bandit's question about a revaluation to a lower level, let's say $1,000 an ounce or even $2,000 an ounce, and why I selected this question to appear in today's video is because this idea actually makes more sense than any other option and would be perfectly in line with what the United States did in February 1973 when it revalued gold to $42.22 an ounce, despite the fact that the price was already well above $60. Because by doing this, not only can you increase the size of the assets on your balance sheet, making the debt at least look more manageable and making it easier to borrow more money down the line, which we know the United States wants to do, but you also make a statement to the market on the value of the US dollar relative to gold by saying, we think the dollar is a lot stronger than what you think it is, potentially making it easier for investors to maintain confidence in the dollar by not recognizing the full devaluation that we see reflected in the current price of gold. Now, for anyone concerned that a revaluation to a much lower level than where the market is at today could cause a large pullback in precious metals prices, let me just inform you all about what happened in 1973 when the gold revaluation took place in the month of February. Because in that month, the price of gold, despite being revalued to below where the price already was, it went up by 30%, and silver price also rose 21.7% because gold revaluation is just recognition of what we know to be true, and that is fiat currencies have no value. And even if revaluation once again comes in way below current market price, it remains a bullish message for precious metals and precious metals holders and will ultimately drive prices up over the short term as well as the long term, no matter where the government arbitrarily sets that revalued price at, just as we've seen since February 1973, as the floating spot price of gold has gone from $60 per ounce all the way up to $3,400 per ounce. So with that said, I want to thank everybody for watching. Please remember, if you enjoyed the content, to leave a like below. If you have a question you'd like to see me answer in a future video, also leave that in the comments section below. And if you think this content is important and needs to be seen by people you know and love, please don't be shy. Share this content with them, as it helps my channel grow. And as I say at the end of all of my videos, please remember to take care of yourselves and take care of each other. I'll see you all in the next video. Goodbye.